They told you that to buy buildings, you need money. Your money? Savings credit approval. Years of sacrifice. That is the story designed for employees. But the top 1% do not play that story. They do not save for decades. They do not wait for permission. They do not risk their own capital first. They control assets with other people's money. And once you understand this, you will never see buildings the same way again. You will realize the gate was never locked. You were just never shown the key. The average person asks, how much money do I need? The elite ask, how can I control the deal? Control is more powerful than ownership. When you control the deal, you control the financing. You control the narrative. You control the upside. Money is everywhere. Capital is hunting safety. Investors are hunting yield. Banks are hunting stable borrowers. The rare thing is not money. The rare thing is someone who understands structure, someone who can see risk before it appears, and design protection before problems arise. The top 1% never buy random buildings. They look for mismanaged assets, under-market rents, poor marketing, lazy management, hidden inefficiencies. They are not buying what the building is today. They are buying what it will become tomorrow. They analyze numbers with precision. Income expenses, debt service projections. If the math works, capital becomes easy, because sophisticated investors do not invest in dreams. They invest in predictable returns, in systems that can be improved, in assets that can be repositioned. Here is where the game changes. They put a property under contract, with due diligence periods, with financing contingencies, with legal protection. They secure the asset first. Now they have something tangible. Now they approach lenders, banks, finance the majority of stabilized properties, often 70 to 80% of the value. The remaining portion, they raise from investors, high net worth individuals, private equity groups, family offices. Those investors want passive income, tax advantages, equity upside. The operator structures the deal. Investors bring the equity. The bank brings the debt. The operator brings the expertise, and often very little of their own money. Sometimes none at all. Only credibility and execution. The elite never rely only on market growth. They create growth. They renovate units strategically, improve tenant quality, increase rents to market levels, reduce unnecessary expenses, optimize management. As net operating income rises, the building value rises because commercial property value is tied to income, increase value. Once value increases, they refinance. The bank now lends based on the new higher valuation. Capital is pulled out. Investors may be repaid. Equity remains. The building is still owned, but original cash is mostly returned. This is how wealth compounds, not slowly, but through engineered expansion. After one successful execution, something powerful happens. Trust expands. Investors call first. Banks offer better terms. Brokers bring private opportunities. Capital begins to chase the operator. Because in finance, certainty is magnetic. A proven track record is more valuable than cash. Now scaling becomes easier. More units, larger buildings, stronger negotiating power. The machine accelerates. Momentum replaces doubt. Scale replaces limitation. This is not luck. This is positioning. The top 1% position themselves as stewards of capital. They master underwriting, risk management, communication, leadership. They understand that money follows competence. They know that fear disappears when numbers are clear. They speak the language of lenders. They speak the language of investors. And when they walk into a deal, they do not look for approval. They offer opportunity. The truth is simple. The wealthy do not wait until they have money. They build the skills to command money. They do not ask, can I afford this building? They ask, can I structure this building? When you become the person who can structure, who can calculate, who can protect downside, who can create upside, capital stops being a barrier. It becomes a tool. The building becomes leverage. The leverage becomes freedom. Freedom becomes scale. Scale becomes legacy, and legacy becomes ownership, without ever risking everything you own.